This is your LMAX exchange technical update for Wednesday, December 7th, 2016. Euro dollar. So the euro has seen a bounce in recent trade out from the recent 2016 low that was set on Monday at 105.04, but any rallies are classified as corrective and should find some resistance into some previous support, turn resistance in the 108.50 to 110 area. At this point, only a break back above 110 would really compromise the bearish outlook, again with a lower top sought out ahead of fresh downside back below that recent low at 105.04 and towards the 104.63 multi-year base from 2015. Sterling dollar. So cable has seen an impressive correction out from those recent 31-year lows, but at this point the market has come into some previous support turn resistance in the 128 area. Only back above 128 would take the immediate pressure off the downside, while below 128 suggests that the downtrend remains firmly intact and could open the door for the next major downside extension. Dollar yen. So dollar yen remains well bid with the market trading just under a critical psychological barrier at 115. Daily studies are looking a little stretched, so there is risk for a bit of a short-term pullback, but we would need to see a break below at 111.36 to take the immediate pressure off the top side, which then could expose a more significant correction down towards previous resistance at 107.50. Euro Swiss. So Euro Swiss has seen a correction higher in recent trade, but overall here the pressure remains on the downside and a lower top is sought out somewhere ahead of 108.50 in favor of that next downside extension to retest the 2016 base at 106.24. Aussie dollar. So Aussie has seen some setbacks over the past several weeks, and this market is leaning towards the bearish side with this latest consolidation classified as a bearish consolidation, and the market expected to break down below some recent support, which comes in down around the 73.10 area, which would expose and open the fresh downside extension to test 71.45, which is medium-term support. Dollar CAD. So dollar CAD has seen some setbacks over the past several days, but the market remains highly constructive and is now looking for that next higher low in favor of the next upside extension back towards and eventually above the 35.89 highs that we saw going back to early November or mid-November, exposing a next upside extension towards 140 further up. Any setbacks ultimately should be very well supported ahead of 130. Kiwi dollar. So Kiwi is showing signs of topping out in 2016, with the market now looking like it wants to put in a lower top ahead of that next major downside extension below critical medium-term support at 69.52. SPX 500. The S&P 500 continues to push its way up to record highs, with the market establishing above 2200 now and potentially looking for the next push to 2250 and 2300. At this point, we would need to see a break back below 2180 to take the immediate pressure off the top side. Gold. So gold has seen some intense setbacks over the past several days, but the market is now looking oversold and is now testing also some internal support going back to 2013, roughly in the 1130 to 1180 area. At this point, only back below 1130 would compromise a longer-term basing outlook and expose a retest of those multi-year critical lows just ahead of 1000 from back in 2015.